those exciting times that the S&P has hit the record 5,000. I think it's come a little down since then, but exciting times. The stock market has been super resilient, and obviously after having the woes of 2022 and all the way, through 2023, things seem a bit skeptical. However, things have definitely progressed with the markets, and it's exciting that as an investor, you've been able to reap the returns that we've seen over the last 12 to 14 months. Looking forward, though, as investments become more and more expensive, it becomes harder and harder to make investment decisions. So heading into 2024, no one knows what the markets are going to do. Not me, not you, not Warren Buffett, nobody. So when it comes to finding places to put capital, there are investments outside of the big names that we know, such as Microsoft, Apple, Google, that are still at pretty attractive prices. In addition to that, putting money into things that at least are going to minimize the effects of inflation are also going to be important. So heading into 2024, what got you to this point in investing doesn't mean you have to keep doing the same thing over and over. With investing, we want to make sure that we're adaptive and that we are looking at all of the available investments, not just the ones that have done really well, because each year is a little bit different. So 2024, first, we want to make sure we have a margin of safety. Make sure you have enough money in the bank to take care of anything that may or may not happen, and to ensure you are not going to make emotional decisions when it comes to your investments. And if you have some extra money on the sidelines, which currently, last time I read, there's over $6 trillion in money markets not being invested at this point in time. We're starting to see some people get late to the game. People are starting to see the investment returns, and they're getting the fear of missing out effect of investing. Rather than being a long-term investor, you always want to keep your money in the game and allow things to compound over time. So with that being said, we want to look into underpriced companies that are trading much more cheaply than the household names you may or may not know, as well as any additional capital looking to invest into dividend-paying investments that could be treasury bills or bonds or inflation-protected securities, which aren't the best place to put your money for the long haul. And I don't like to personally invest money into those areas unless I have to. Right now, investments seem a little bit expensive. The good thing is we bought most, if not, I would say at least 95% of the investments we bought at really, really good prices. So we want to just let those things do what they do best and let them grow and allow the investments to do good over the long haul. So we want to be skeptical there with choosing new investments. In addition to that, we want to keep an eye on interest rates. It's been said that the Federal Reserve Chairman, Jerome Powell, isn't going to just cut rates for the sake of cutting rates. If we see some sort of slowdown in the economy that could lead to a recession, the Federal Reserve is in a prime position to cut rates to help boost things. And when rates cut, that across the board increases the value of assets, which is going to be a beneficiary of seeing those investments rise over time. So if we get that rate cut, that'd be good if you own investments, whether they're in the markets, real estate, anything that's an asset will benefit from a cut in rates. From that point on, what we want to monitor is essentially the long-term allocation of assets, have some margin of safety on the sidelines with cash, treasury bills, more conservative investments. And with those conservative investments, we'll either keep them where they are, or if things start to shift in a negative direction, we have ammunition on our side to allow us to take those chips and move them into investments that perhaps pull back, which pullbacks are normal. If things start to pull back, you never want to freak out, especially with the investments that we've purchased in 2023. Those investments we bought at really good prices, and the chances of them pulling all the way back to where we bought most of them is, in my opinion, pretty small. In addition to that, last year, I believe at least half of the returns in the S&P 500 came from what's called the Magnificent Seven. That's going to be Facebook, which is now Meta, Microsoft, Apple, Netflix, Google, and NVIDIA. So if you see these investments, you're like, man, I wish I bought them. Hey, we did buy a good amount of them for our portfolio. There's a couple that we missed on, such as not purchasing NVIDIA. However, based on last year's performance, I feel like we did pretty well. So I hope you're happy with the performance that we saw last year with the portfolio in your account. With that being said, I am researching some new ideas. I am not anticipating to make major adjustments this year. And we just have to continue to look forward and be open-minded to new and exciting opportunities that we can find to allow all of the investments to grow and compound over time. Other than that, hope you are having an amazing 2024 so far. Let me know if you have any questions. Feel free to reach out, and I will have an update for you as needed. Bye, everyone.